I think they'll be hard-pressed to tighten aggressively, not just because of where bonds are, but because I think the economy will slow, but supply chain may get better. That's something very few people are thinking about. I monitor supply chain closely, and there are a lot of industries where it is getting better, and it certainly will be easier after Christmas. The profound negativity that I hear is unwarranted. I do think for the investing club, we are doing some buying. We sold higher. Why shouldn't we do some buying? This is typically a seasonable, strong period, and I see the economy being good. I've yet to hear anyone say that they like it here. I've even heard talk of stagflation. I'm not buying it. That would put the S&P down, say, 10, 15%, and I just don't see that possible. I think there's too many great stocks here. Remember, not every stock is a tech stock.
Yeah. Jim, are you willing to accept that I think that what we're thinking now is that maybe Omicron could be quick and it could be not as serious a disease? Do we know that yet?
No, I think that's I have Dr. Topol on tonight, who's been really, really good. I don't want to jump to that conclusion, but I would say that there's going to be a moment, Joe, where we basically have to say, listen, you're at risk. You're at risk if you went to see the movies this weekend, and that's okay. I think we all have to say, listen, no more lockdown. Clearly, let's take that off the table. If you go out, you have to assume the risk that you might get sick. But if you're triple vaccinated, maybe you won't get sick that badly. But, Joe, I think that this whole notion that everything's going wrong, the Manchin stopping the bill, I'm not buying it. And I think that, frankly, our treasuries, I never want to say that the treasury market is wrong. I'm telling you that things are better than people think. No one seems to want to hear that, Joe. I think they are.
Yep. Good. Yeah, there's unbelievable. At least Spider-Man is doing well. I don't know, maybe they all had Spider-Man masks on, Jim. And
they assume the risk. They assume the risk. Right. I mean, you wear your mask, you go out. But enough. Yep. Let's go forward. Let's not go backward. All right?
Sounds good. Very good. Thanks, Jim.
Thank you.
All right.
Thank you.
Okay. Joining us right now is Surat Sethi. He's a managing partner and portfolio manager at DCLA. He's also, of course, a CNBC contributor. Surat, you heard what Jim said. He said, things are better than maybe the market's giving things credit for, and maybe folks actually are going to go out, take the risk, the burden on themselves, and that's the way folks are going to move forward.
I agree with Jim. I mean, I think we are way ahead of where we were, last March, and we have something that we have to deal with. I think the Fed is prepared to do what they need to, and I think the combination of that, given where we are in the cycle, I mean, we're at the end of the year. We've had a 20+% year. Investors are looking to window dress their portfolios, moving, out of equities. Those who have done well, I'm not. I still think there's opportunities there. I think you've got some great companies that if they keep on selling off or have sold off 5, 10, 15%, and I think the economy's strong. We're not dealing with a demand issue. We're dealing with a potential supply issue because of the amount of goods that consumers want. And what's happened is we've extrapolated that again to say, hey, more inflation coming down the road doesn't necessarily mean that the economy is going to slow. In fact, the economy is still strong. So I think we're going to, this is what was expected when the Fed raises rates.
Shepard Smith here. Thanks for watching CNBC on YouTube.